Welcome back. We take a closer look at the day's market action with Graeme Franck from Psg Wealth Sandton, Grayston. Thank you so much for your time, Graeme. After sessions, a lot of sessions in which the markets traded in green territory. I mean, we had seen those U.S. markets hitting fresh record highs. Today, we are seeing a pullback both on the local front and also stateside. And I'm wondering if it is the hotter than expected producer inflation print we saw today for July, which is quite interesting because the consumer inflation was telling a different story.
Yeah, I think that's correct. I mean, if I just look at our market very quickly first, we were already down this morning prior to the inflation print coming out of the US. So probably not a massive impact on our market, but specifically on the US, you're 100% right. The stickier than inflation has once again resurfaced this big debate about Fed rate cuts versus inflation. I see that Mr. Trump and the Treasury man, Scott Bessent, came out overnight sort of saying that the Fed funds rate should be 150 basis points, or 1.5% lower than it actually is. So obviously some more cage rattling from the Trump administration there. And I think that's just a case of wanting a whipping boy should something go wrong and taking all the accolades should something go right. So, you know, that game has always been played by US presidents versus the Fed, but they certainly are starting to walk quite a tightrope now with sticky inflation and further interest rate cuts. And last point, at the moment, the market is pricing in 25 basis point cuts in the US between now and the end of the year. So let's see how that changes.
Well, talking about things that have gone wrong, Truus' share price, went in the red today. And actually being the standout there in that retail sector, declining by almost 5%. What happened there?
So they came out with a trading statement, Truus, and I think the underestimation of the year, they said they highlighted, quote, persistent suboptimal macroeconomic conditions. That was the title of their release, and basically just saying that the consumer is so sticky. You saw the unemployment report come out earlier this week, which was very poor. The whole retail sector, be it Truus, Mr. Price, even AVI, some of these really high quality, well-managed business, their share prices have come under huge pressure. And it's, again, the consumers just under so much pressure in South Africa at the moment. No matter how well the business is managed, they're facing pretty strong headwinds. And as you say, Truus was down actually 9 or 10% at one stage, recovered in the late afternoon.
All right. Well, let's go into the banking sector and actually on the other side of the spectrum, because we saw Standard Bank being one of the leaders on the JSE in terms of share price gains today. They released their interim results with their bottom line increasing by double digits and also their return on equity actually coming out on the upper side of their target range. Just talk to me about your reading of these results. Did they surprise to the upside?
Yeah, 100%. I think the market was pleasantly surprised that they met expectations, because at the start of the year they were guiding to sort of the 8 to 10% earnings per share range, and the market thought that might be a little bit optimistic. They've come bang in line with that at the upper end, and they're guiding further for the rest of this year and forward to 2028 that we could continue to see double-digit earnings out of Standard Bank. And, you know, for a company that's trading on a PE of around 9 times, I think maybe there was a little too much bad news priced into that. And, you know, contrary to the retailers, we saw the banks having a nice jump. And by the way, Capitec came out a few days ago, also beating to the upside. So quite a trend at the moment in the banking sector.
All right. Well, talking about trends, of course, one that we have been focused on for a while is the gold trend. DRD Gold came out with its year-end trading update, minus saying that it expects its revenue to climb by double digits, bottom line to surge by as much as 74%. Good numbers, but the markets actually didn't really react positively. I think at some point I saw it was down more than 1%. Your take on those numbers?
Yeah, good set of numbers. I mean, you know, the rising tide lifts all boats. DRD's always been very very volatile relative to the rand gold price. When you see a 30-odd% increase in revenue, you're always going to see quite a big kicker to the bottom line. As you say, operating profit was down about 74%. And I think, probably more to come. The balance sheet's strong. These guys, these gold miners at these gold prices are really oozing cash at the moment. So I would expect DRD to continue to do well on the assumption that the gold price remains at these sort of levels, which is a very big if in today's geopolitical environment with so many moving parts. And then, by the way, that's the main reason why we don't have too much gold in our portfolio, because it's just almost impossible to predict. The reason that you'll have it is as a hedge against the rest of your portfolio, and buy some gold and hope like mad it goes down, because it's normally a harbinger of bad news and uncertainty in the world.
Well, Graeme, what is oozing opportunity in your opinion? You're a stock pick for today.
So despite what I said earlier about the retail sector, I'm going to go for Mr. Price, for the simple reason that the share price has come down a lot, and it is arguably the blue chip clothing retailer in the sector. It was just over 300 Rand 12 months ago, 301, 302. Just a few months ago, it was up at above 250 Rand, and now it's sitting just above 200 Rand. So almost a third of that share price has been knocked off in the last 12 months. And, unless you believe that the macro environment in South Africa will continue to remain so poor for an extended period of time, you've got to think that some of these blue chip retailers are offering good value at these levels.
Amazing. Well, thank you so much for your time and for your insights on what has moved investors' money today, Graeme. That was Graeme Franck from PSG Wealth Sandton, Grayston.